All right, guys, welcome back for the March update for my dividend income and other passive income that I've made from multiple different sources, which we'll get into after the introduction. Currently, we're sitting a little bit low, about 30 or so percent off of all-time highs that we've kind of observed over the past few months or so. Due to the recent volatility in the market, some folks I think are calling that we've basically come up from just under 40% down from all-time highs to a little bit of, closer to 20% down from all-time highs. A lot of folks calling this a fake bull run or a bull trap. Some folks might be calling it. I personally am, continuing to buy when the price is right. I haven't really been buying as much over the past week or week and a half, just based off this recent increase, and not a lot of great buys in comparison to some of the stuff that I bought in recent times over the past month or so. So relatively been keeping off of the handle, but that being said, still believe that there's potential downturn to be occurred. I'm gonna really be sitting back and holding off until we get to around the $200 mark in the SPY, or about 2,000 in terms of the S&P 500. That just means that we're going to be down close to about 45 or so percent down from all-time highs, and that's kind of my next buy trigger point. I'll probably buy individual securities in between that and now, depending on if the price kind of hangs out. And also, if the price kind of hangs out here over the next month or so, I'll probably continue to buy at these lower prices at my normal intervals, but I won't be going into any sort of savings unless the price begins to kind of dip down again. Normal probably accumulation of about 1,500 or so over the course of the month, generally speaking, in the middle of the month or so, and accelerating that as prices continue to go down. Jumping into the oil price, for those of you guys know, I am a petroleum engineer, and that's currently what I do most of the time at my day job. Sitting around $20 or so in terms of WTI, and just over $26 for Brent crude. So pretty decent drop off in the market here from where we were just even 2 months ago, based off the recent volatility that we're seeing in the market. Natural gas, if any of you guys calculate that or look at that, Henry Hub is about just under $1.70 per million BTUs, which is pretty significant. Yeah, that's basically it. And well, I guess we should just get right into the portfolio view right after the intro. So let's do that. All right, guys, welcome back to the portfolio. We're currently sitting at around a total portfolio value of $378,000 or so. That's down 62, almost $63,000 from all-time highs. That is inclusive of money that I have been including, so it's kind of normalized there. Portfolio value at its top, when we didn't add any contributions, was around $410,000, but since then we've added about $20,000 to $30,000. So I've been keeping track of that, just meaning that the all-time highs, if the portfolio were to continue to be at that price, would be in the 420 to 430 range. So we're still about 60 something thousand dollars off of that. And same with the all-time lows. It would have been close to, I believe, $300,000 at the lowest point, but we did have that $20,000 to $30,000 that I added into the portfolio. So accounting for that, we're about 47,000 or so above that. Portfolio income coming from this portfolio is around $14,200 looking forward for the next 12 months or so. This year, which we'll get into a little bit more in the little bit rest of the video, I think we're aiming at the moment, without any further additional capital being added to the portfolio or anything along those lines, around 13,500. So that also doesn't include any dividend raises or cuts, so that could also impact us going forward as well. But even without adding any additional capital, I'm basically forecasting around 13,500 coming in, but of course I'm going to continue to add capital to the portfolio. That gives us around almost $1,200 a month, which is pretty crazy. Pretty excited about that. That, in combination with the other things like Shopify and YouTube, gets us a pretty good paycheck for the month of March. I'll walk into that as well, which is the main reason why we're having the video. Majority of that is coming from the individual retirement account, and followed by the Roth and a bunch of other smaller accounts as well. But obviously, I think everyone that follows the portfolio likes to see these graphic breakdowns. The one on the right is by capital allocation by sector. The one on the left is the income by sector. That big yellow piece of the chart there you can see is energy stocks. I own energy stocks, one for just basic compensation, and then two, I am a little bit more knowledgeable about the sector, or maybe biased is the right word, to buying energy sector stocks just based off the fact that I work in oil and gas. So that is roughly followed pretty decently now by financials and real estate, and an increase now of healthcare and industrials over the past month or so. But you can still see that income is a massive, whopping, probably almost two-thirds of income coming from those three sectors: energy, financials, and real estate, and then also followed pretty decently by healthcare and industrials at just under 7% respectively for those two. So while it is trying to equal out the portfolio in a capital allocation sector, income just continues to be massive in the energy sector, just based off of where we're at in terms of what we're holding at the moment. Yield by sector is around 10.5%. That is partially by design, partially not by design. Obviously, generally speaking, energy stocks like my BPs, Shells, and even Exxons over the past several years have been paying relatively high yields. Now, with the depressed pricing that we see in the oil markets and the actual commodity markets themselves, that is causing a depression in the securities that we see in the energy sector. So, in turn, leads to higher yields, which also could potentially lean towards future dividend cuts. But I believe the companies that I have in here are pretty high stability. There are a few that are somewhat riskier that I've been holding on to for a while now, which I've either lost the majority of the value on anyway, so I haven't really been keeping track over the past month or so. But there are a few that I had as somewhat speculative plays that were pure exploration and producer plays. So those might turn into some losses as well. But so far, so good on those. Nothing too drastic other than the share price going down, but no bankruptcies or dividend cuts at the moment. Cash sitting around about 7% or so in terms of what we have in the portfolio. Just kind of looking at it here. And if we scroll over to this, we see that cash being this blue wedge here, it's about 7% of the portfolio. Um, yeah, that's basically all we're going to talk about, I think. Oh, this lighter blue, the portfolio I meant. I think that's really all we're going to talk about with respect to this. Let's kind of hop into what the actual dividend is, dividend income we got for the month of March, and the total passive income that we got for March. But directly right before that, current dividend yield on the portfolio is about 5.73%, with the yield on cost being 5%, meaning that the overall portfolio is down, as we already know, from all-time highs, what I've been investing in. So a lot of what we're investing in now is around 2017, sometimes 2016 or early 2018 prices, depending on what security you're looking at, whether you're looking at financials, industrials, or what have you. So that yield on cost obviously is just based off the fact that a lot of my energy positions are down, some of my financial positions are down, and so I haven't been able to accumulate enough shares where this yield on cost is less than this or more than this dividend yield at the moment. So hopefully, as we continue to buy more shares throughout time, that will kind of invert again once the price of the securities within the portfolio goes back up. Previously, obviously, before we had this last month of volatility or so, my dividend yield was always less than my yield on cost, which was a good thing, meaning that I'm continuing to have compounding, continue to grow the yield year over year in terms of what the cost of the portfolio was. But obviously, due to this recent downturn, we're down low into the portfolio value now, so it's actually starting to impact yield a little bit. So actually hopping into the forecasting that we have done here in this part of the portfolio, we are currently down to March. So just to reiterate, in January and February, we're going to earn $753 and $830 in terms of dividend income, respectively. Currently in March, we're looking at just over $1,400, which I believe is one of my better months. I think I might have gotten $1,500 before in the past. We'll kind of check that once we actually get to the monthly dividend analysis here. But I think that this actually may be the best month that we've had yet. Companies that paid me are BlackRock, Bryn Mawr Bank Trust, BP. What else did we have? Johnson and Johnson. We had Cosmos pay me. We had Main Street Capital, 3M, Realty Income Corp, which we were supposed to see a big jump up in income coming from that because I purchased about another 100 shares or so. So we'll go from about $11 this month to hopefully $34. Lo and behold, if the company does not cut the dividend within the next 6 months or so. PepsiCo got $52 or so. Got Phillips 66. We got Royal Dutch Shell for a $57 payment. Next time we should be getting over $150. So hopefully that happens as well. Been buying some Shell, some BP, and Exxon since the price has been relatively depressed, and I believe that those will be able to sustain the dividend for the long term. I bought a little bit more Stag Industrial as well. Actually, I should double check this to see what's going on here. I think we should have a little bit more Stag dividend coming in, but I'll check that after the video. Definitely agree with the $15, but going forward, the $18, I thought I bought another 50 shares or so of Stag, so I'll have to check that, why it didn't go up as much as I thought. Wells Fargo, we should also see a jump up of about $20 or so. Bought a little bit more shares in that, but got $128 or so in this month. Some ETFs in here, getting $9 from just the regular S&P 500. This is the iShares version of the S&P 500, or what you would buy SPY or any other Vanguard one. I don't remember what the Vanguard one is, VTI or something like that. So $9 just coming from that, which is pretty cool. Just starting to see that. This is in the YouTube Moolah portfolio here. Got some more in Johnson and Johnson in the YouTube Moolah portfolio. Also 3M in the YouTube Moolah portfolio as well. Have a little bit of cash in my Roth IRA, but haven't really been able to wait until tomorrow to do this video. So it's just $1 or $2. So if anything, the income that we have for the month will be off $1 or $2. BHP paid me $180 or so, which was a good one. If you haven't picked up BHP yet, under $30, that's a good one to buy. Had LYB Chemical pay me, Main Street Capital again in my Roth IRA. I have it in two different accounts here, so don't be confused with that one. Some more Johnson and Johnson as well. This one is in my M1 Finance account, another 3M. This one's in my M1 Finance account as well. We got some Visa, purchased a little bit more Visa as well, so hopefully continue to see the dividend go up as we accumulate a little bit more shares. And actually should be buying some more Visa tomorrow because it's the first, and I have Robinhood and Robinhood and M1 Money going in tomorrow. Some more Shell in Robinhood account. Southern Company first dividend in Robinhood. Continued to buy some more shares, so that should go up next time as well. Have some Essential Utilities, or what used to be known as Aqua America. It's a utility company in the Northeast United States. Gives me a small little drip here and there. Exxon, we had about a $71 payment or so, and should expect that to go up a good bit next time, about $175 or so, just based off the fact that I grabbed another 100 or so shares. Maybe it was closer to 120 shares from Exxon. So hoping that that's able to maintain the dividend and hopefully get close to almost $800 a year in dividends, probably closer to $700 to be exact in dividends. So that should be a good time. IBM paid me a small chunk of change as well, and we had more Realty Income Corp in the computer shares account. Relatively small positions there. We had some Waste Management as well. And then I think we're getting into some company stock that I have, and Cardone Capital, as well as some personal savings here as well. No drop off in Cardone Capital yet. So hopefully we continue to see that go in. And I believe today actually I was supposed to get my K1 form. So if I did, I promised folks I would make a video on that once I got the K1. So definitely need to do a little bit of that once we go forward. And actually checking the rest of this out, so we're about 14,000 in the month of March here, for about 13,500 for the remainder of the year. Third month of the quarter is always the largest. June is also going to be big. September is also going to be really big, just based off the fact that they're the third month of every quarter. And then December also is going to be big. And I think that's just based off the fact that I've been buying pretty heavily over the past month or so. I think I added close to about $37,000 or $38,000 in capital when the market was relatively depressed. So that's picking up shares at 10%, 20%, 30%, sometimes even 50% discounts if you're including some of the financial positions and energy stocks. So if those companies are able to maintain those dividends, I'm basically getting twice as much dividends for the amount of money I was normally getting, or amount of dividends I was normally getting just a month ago. So if they're able to maintain the dividend, that'll be great. And I also was able to initiate some positions and some companies that I didn't have before, like Boeing. Granted, I know that doesn't pay a dividend any at the moment, but in the future, it'll probably bring it back online. So I'm pretty confident that in the future, it'll bring back the dividend payments fully and continue to raise them as things get back to normal. Looking at monthly dividend analysis, let's just double check if this was my biggest month to date, and it looks like it is. So 2019, the biggest I see here is just under 12,000 or $1,250. So it looks like March 2020 is my biggest month to date, $1,400. I think the second and third biggest was the September 2020 and December 29, or sorry, September 2019 and December 2019. Sorry. So yeah, the continued investment is continuing to grow the monthly income here. We're also seeing June income looking like it's going to be about 1,700. Looks like we'll get close to 2,000 when it gets to September of this year. So with continued investment and maybe some potential dividend raises, and added capital to the portfolio, hopefully we'll be able to nudge this over 2,000 unless I distribute, because I think you guys can see this pretty wonky graph here. I think this is actually kind of cool. But you can see the kind of how the oscillation happens month after month. The peaks here are the third of every month, and I think the troughs of this kind of channel are the first month of every quarter, and the peaks are the third month of every quarter. And you can see these are just the monthly dividends that I've been getting since I started really investing back in 2014 2013 timeframe. And so you can see it's continued to go up if you were to kind of draw an average line through the middle, but you can still see the peaks and troughs, which is actually really cool from my thought. But looking at March and historics, you can kind of see the growth that we're having year over year. So March of last year compared to March of this year, we're up 56%. And just based off the investments that I've made and the reinvestments of capital that I've had in the portfolio, and just dividend raises between, I guess, the last month or so, if there's no dividend cuts or continued capital contributions, that means positives or negative contributions to the portfolio, even next year is supposed to add about another 30 to 35% in terms of growth. And I think that'll continue to go up as I continue to add more capital to the portfolio here. But even just looking at January and February, those are supposed to go up next year as well, just based off the additional capital I've added to the portfolio. So really interesting way to look at it here. A lot of these months here are very similar for 2020 and 2021, and that's obviously because the ex-dividend dates for a lot of the stocks that I have and purchased in April haven't really gone through yet. So you'll start to see these diverge as we kind of gone through, and that's why you see that divergence here in January, February, and March, just based off the fact that the sheet is kind of waiting for, some of it is once you go through the actual month themselves, like what we have in here, these red numbers are, kind of manually inputted in here to make sure they don't really change. Then you have the forecast data pulling from the websites kind of seeing when we're expecting these dividends. So as I continue to buy more shares or they continue to increase the dividend, it'll automatically update the forecast data here. So the same happens with 2021. So unless we go through April or something like that, um, they'll remain the same. So the 747 is the 747 that you're seeing in the 2021 graphic as well. So um, things have gone relatively well with respect to Shopify and YouTube income. So let's just quickly get into that. So just over the past month, we've made about $1,000 between me and Kyle, the passive income investor, from our services that we're offering you guys. So if you guys are interested in the spreadsheets that we're kind of walking through here, or just anything else, just give us a contact on the website. Reach out to us. We'll love to talk to you guys. Ended up with about $491 net once you got some of the Shopify fees paid for and the PayPal fees as well. So nothing wrong with that so far. We also had around $375 or so in income. We're not finished March yet, so I think when I checked, it was around 349 with about 3 days to go. So I think I just assumed it was going to be 375. So plus or minus 20 bucks, I would say, probably underestimated. So I don't think we'll break 400. We broke 400 in December, so I appreciate you guys doing that. But I think we're just probably going to hang out at this 375 or maybe 390-ish once the month kind of ends here. And those two things, the Shopify and YouTube, combined with the $1,400 or so in dividend income, gives me a passive-ish income of around $2,278. That's before tax or anything like that. So that Shopify income is before tax, that YouTube income is before tax, that dividend income is also before tax. So keeping that sort of thing in mind, it's pretty good. It's almost 20% of my take-home pay, maybe a little bit less from what I do with my normal job. So that's cool to know, because considering I live only off about 40 or so percent of my income as it is, and maybe even less at the moment, just based off the fact that I'm kind of on a assignment here where some things are paid for. But normal business, normal life, back in Houston, last year when I was living normal, this probably would have paid for close to 50% of my expenses for the month. So that's a really cool thing to kind of look at, and that's kind of what I'm aiming for, is really to get 50% this year, and close to 100% in the next 3-4 years. So that way I can potentially just make some different decisions, whether I want to go more heavy into my own personal businesses or continue working. So at the moment, we're up to around $5,000 in passive-ish income for the year. I say passive-ish because obviously we still have to do a little bit of work with Shopify, and we also have to do a little bit of work with YouTube creating those videos, but majority of which is that dividend income, which is completely passive. So at the moment, we are up to around, what is that, 2,900, so almost $3,000 in dividend income through the first 3 months of the year. So looking pretty good. And then, of course, the remaining parts of the year, we're looking at about 10,500-ish or so, which of course will go up, hopefully, fingers crossed, unless things get drastically worse in the market. But taking a quick look at some of these graphics, I used to have some more graphics up here, which I still need to build, so I apologize. But the real important numbers here are these numbers here. So the total income, so expected the 13,500-ish at the moment in terms of 2020 dividend income, and the yearly goal is about 14,000 for those of you guys that are looking for it. That was a 50-ish odd percent increase year over year. So we are actually, it was a 57% year over year, currently at about 51%. So in terms of the forward 12-month income, we've broken this 14,000 mark. We're at about 14,200-ish, but we're trying to get the 14,000 in 2020. So we have to get a little bit higher of net income coming in from dividends for this to kind of make sense here. And I don't really have an overall passive income sort of goal. I mean, maybe it'd be closer to 20,000 if all things are said and done. So we're kind of on track for that if you kind of think about it. We're at about 5,000 and we're a third of the way through the year. So if we're able to kind of keep on track with that, looking at about 20,000 in terms of income-ish on the side would be about preferred. That's kind of what we're looking at. But yeah, things kind of accelerate next year. We're still way off from our goal. We want to get to around 21,000 in terms of dividend income. But yeah, things are looking pretty good. If you just include the YouTube income so far and the Shopify income, it's around $2,000 between the two, $2,100 or so, and then you combine that with the dividend income. We're currently looking at about 15,000, but that's not including any forecasting associated with YouTube or Shopify. Maybe I should do some forecasting. I know I used to do it in the past, which at the moment, if you kind of play that forward, is around $1,300 or so a month in passive income. Um, and that's not really including any forecasting from Shopify or YouTube. So probably if you were to forecast this out a little bit, you'd probably get closer to the 20,000 that I was kind of mentioning. And maybe I'll fool with that a little bit in the future to see if it's worth it or not. To get to the 2021 income goals around 21,000 in terms of dividend income, need to invest another $120,000. It's going to be more than that for sure, because this is based off of the dividend yield that we have in the portfolio at the moment, which is close to 6%. So that being said, we will definitely need to add way more than $118,000 over the next 24-ish months, or 2012 and a half, 20 months, 18 months or so, before the end of 2021 kind of gets there. 21,000 is going to be a stretch goal for sure, because it's a 50% increase from this year's goal of 14,000. So we're definitely going to need to add a bunch of different income streams and just cut down on expenses over the next couple months to be able to get ourselves a head start on 2021. But in all honesty, I thought 2020 was going to be a stretch goal, and we're really close. I mean, we only need to add another $400 to $450 in total, out of the 14,000 that we're kind of missing in 2021 at the moment. So didn't think I'd be near close to that. I thought it would be kind of a struggle, and I'd have to be adding and dipping into a lot of savings towards the latter half of the year. So the fact that we're already here at the moment is pretty surprising. But that being said, we do have some risk and volatility continuing to be in the market. So some of this 13,500 may disappear, but be partially offset by continued capital contributions to the portfolio. So I think that's relatively it, guys. I mean, I love giving you guys these portfolio updates. Let me know what you like down in the comment section down below. Let me know if there's anything that I kind of missed or hopped over, or maybe just didn't explain very well. But really appreciate you guys always stopping by the channel. I really appreciate all the love and support. For those of you guys that didn't hear this earlier, we hit about 5,000 subscribers, and 70% of you guys aren't even watching or subscribing. Sorry, 70% of you guys aren't even subscribing when you guys watch the videos. So it's been relatively consistent. So I know with the subscriber growing, the impressions are growing as well. So we're continuing to build the community, which is the important part. We have a great community. Independent investors in here, passive income investor, JMac, Dave from Hidden Freedom Investing, Gen X Dividend Investors. So we have some really high quality guys, and Rebecca from Quest of Fire. Some great girls in here as well, with Maria from Minds in Motion as well. So I mean, we got a great community that continues to contribute to the financial education of everybody on YouTube, which does a great job. I don't think any of those guys really spit anything or say anything that I would heavily disagree with. There are some minor tweaks that I would say with some of these folks, but most of the time I agree with, I would say about 90 to 95% of everything that they say, and anything that I don't necessarily 100% agree with, it's just a matter of differencing in investment strategies, which doesn't necessarily mean they're wrong. It's just not right for my investment strategy. So like I said, really good month, highest month to date. Really appreciate you guys stopping by. Would love to hear your thoughts in the comments section. And yeah, first take, I think that was relatively good. I did some minor messing up at the very end there, so might clean that up, might leave it in just for transparency. And I'll talk to you guys in the next video. Cheers.